Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Thursday. It's December 7th. It's early. It's about 7:52 in the morning. I'm getting on to an early start this morning. Just couldn't sleep this morning. Was worried and concerned about all the market action. Don't want to miss any of it. Soon I'll be like T-Buzz, waking up middle of the night or trading in the middle of the night. God bless. Nasdaq is up about 34 points. The Dow's down about 67, this is really up and down, both really random trading action. But you could definitely see by this morning's action that technology is outperforming blue chip stocks. But again, this is random to the upside and this is random to the downside. And this is one of the reasons why I look at the S&P 500. It gives us a nice mix of all of the sectors combined. And as you can see here, the S&P is doing very, very little. I'm suspecting it's doing very little because tomorrow, let me just pull up here. Tomorrow. Today we have the jobless claims. This is not going to be a big report. The number has been near the low 200,000s for probably, a year and a half, as long as I can remember. And it hasn't really shifted much at all. I'm not expecting it to shift. Even if it goes up 10, 20, 30,000 or down 5, 10,000, it's been really stable. For us to get concerned over this number, it would have to get closer to 300,000, and we're not on that trajectory right now. Tomorrow, we have employment situation. Now, this is a big report, and this is something the Fed is going to be paying attention to. And this is one of the drivers yesterday, the ADP report. Let me just show you here. This was the private report that foretells what the employment situation is supposed to be. And if you were to look at the employment report, the ADP, it actually came out less than expected. Slightly less than expected, which means we're seeing a tighter job market. Tomorrow's report is going to either confirm or not confirm that. Now, if the job market is getting tighter, that means that whatever the Fed is doing is working, and that means there's less inflationary pressure. But you could see here the unemployment rate. I want to see the unemployment rate drop. I want to see the unemployment rate drop to 3.8. I want tighter employment. Tighter employment means things are looking better. Tighter employment means that economy is getting out of where we've been. Does it mean that Fed is going to start lowering rates tomorrow? Of course not, but it's a good sign. We'll see this tomorrow. We could expect a subdued trading action as a result of that, however. I wouldn't put it past it. So that's the big report. Market may be a little bit subdued as a result of it. TLT, the bond market, still going up. Now, it's down about half a basis point this morning. But again, I'm gonna tell you something. This is something, and I wouldn't be surprised if it backed up a little bit and if rates increased a little bit, because this is a declining long-term rate. This is telling us that the market's expecting the Fed to lower rates in March, and you know exactly how I feel about it. Not too worried about the market just yet. We're still consolidating. We're rather choppy. We're right at the 8-day EMA. This is considered more of a choppy. This is in line with much more choppier trading action than anything else. The QQQ, on the other hand, though, if you look at the QQQ, it has seen some sell-off. But even with the QQQ sell-off, which, look at that. It's nothing crazy yet. But this is kind of what I'm expecting from the S&P, just a little bit of a choppiness right here, which doesn't really amount to much buying or selling pressure. Also, just wanted to point out, volatility. This is the VIX. Look at how low it is. Not really spiking all that much. So the sentiment right now is not one of fear or of a bear market. The sentiment right now is just a very choppy consolidation with the market. Kind of like what you're seeing with the Dow Jones right now, where it's just not here or there. Just kind of choppy around this area to see what happens next. And I'll talk about sectors in a minute. Now, we do have earnings. Dollar General, I think they already came out. Let's see here. Dollar General. Let's see. Yeah, they did come out. The earnings on Dollar General were fantastic. Look at that. That's good, giving it a little bump. I remember we got stuck on this stock right here, and it took us up, and we got out around here somewhere. So it's still going higher, which is great. It's fantastic. I like to see that. But you do have some earnings today. You have Dollar General, AVGO, LULU, Docu. Let's look at LULU. I love LULU. I love wearing their jackets, actually. Let's see here. Up. Let's see if it came out already. No, nothing yet. But the stock is near a swing high. Matter of fact, if you look at LULU, it's also almost close to all-time highs. Yes, it is. So Lulu's doing really, really well. I like Lulu. I like Lulu a lot. A couple of years ago, this was my favorite retail stock. So let's talk about fundamentals. And there's something going on right now. Now, I don't remember if you guys remembered, but about 9 months ago, maybe 7 months ago, I was talking about Japan, and I explained that they have a new prime minister, and the new prime minister of Japan is more than likely going to start raising rates. He's not going to be loving this negative interest rate environment, and it's been really quiet. One of the reasons Warren Buffett invested into a lot of Japanese companies was because he knew he was going to get a low rate. Excuse me. Now, things have been really quiet about that. We haven't heard much till now. And look at this. Futures are up this morning as global bond yields climbed amid speculation that the Bank of Japan will soon scrap the world's last negative interest rate regime. What do you think about that? Nobody was talking about that. Energy stocks dropped yesterday to a 5-month low. I've been starting to get a little bearish on some of the weak ones. ADP report on Wednesday showed that private employment is in fact tightening. That's bullish for the market. The futures are still pricing in a 51% chance that the Fed is going to cut rates in March, which I think is asinine, but I'm not going to go there today because I've been going at it pretty hard. Earnings today from AVGO, LULU, Dollar General, DocuSign. Those are some that are reporting today. Initial jobless claims are coming out in about half an hour, as I mentioned, not expecting anything at all from there. Europe is down, not getting any tailwind from there. They're digesting Eurozone growth data while exercising caution ahead of the U.S. monthly jobs report. Losses in travel and leisure stocks are leading the overall market lower. Okay, very important, very, very important. China closed slightly lower. Again, not getting any tailwind from China as investors digested the country's trade data while concerns about Chinese fiscal health continued to weigh on sentiment. Semiconductor stocks led the decline Thursday while media stocks outperformed. Japan, now here's what we're talking about. They closed sharply lower as the Bank of Japan Governor Kazuhida discussed alternatives for a potential shift from a negative interest rates. You heard about that. I told you that was going to happen. Energy and chip stocks underperformed on Thursday. And Chewy Plunge did not do well with earnings. Take-Two didn't do so well with earnings. But again, the big caps have already reported for the most part. Now, looking at the sectors, and you guys know I've told you that blue chips, and smaller stocks are leading right now. Technology, semiconductors, energy, they're not doing so well. They're not doing well at all. And if you look at the charts, which I'll go through right now, you can see retail consolidating, Russell starting to cool off, home builders starting to come a little down. That's interest rates. There's fear that interest rates are going to go higher. Dow Jones kind of consolidating here. Consumer staples starting to come up. I like consumer staples right now. Consumer discretionary, healthcare. Where's financials? Let me see financials. Where's financials? Did I miss financials? You got to watch me like a hawk. You could see financials rallied up and came down yesterday. So we're kind of in a wait and see mode to see what happens next. But I could clearly tell you that blue chip stocks have been leading. Now, right now, all eyes are on tomorrow's employment report. And as far as the S&P 500 is concerned, let me give you some levels that I'm watching right now. Right here, this 450 level. If we start breaking this 450 level, there's a chance we're going to hit the gap. But till we do, it's just very, very choppy. Volume is starting to pick up again. We're starting to get some follow through in stocks. But again, markets have to get past where we're at right now. They need to see the job report, and I think that's going to be tomorrow. I know that's going to be tomorrow, but I think the market needs to wait and consolidate. And also, this is what I was trying to tell folks. Look, we went 10% in November. After a move like that, the market has to consolidate. It has to digest. You know, after you eat a big meal, you have to sit a little bit, let it digest. Well, that's what the market's doing. It's digesting this move right here. And This is not an easy move. And again, after a long trending period, you have a consolidation period, which is what we're seeing right now. Not so sure we're going to break down just yet. I think we're going to wait till tomorrow's report. We may see more choppy trading action. Keep your eye on tech stocks, on small cap stocks, and also on energy stocks. And I'll talk more about energy in the VIP room. When is the VIP room? Well, the VIP room is the actionable live session. That's the second part of this video, and it comes out at 11 a.m. today. Don't miss out. Also subscribe to my Telegram channel and watch my YouTube videos. Fortunately, all of this info can be found in the link in my YouTube videos below the videos. If you don't know where to find it, go to YouTube and go to Roger-Scott, and it's there. Subscribe, like it, and you'll get notified when I post these videos around 8:30, about an hour before the market opens every single day. Hope you guys have a great day. If you want to reach out to me, roger@rogerscott.com. Now, before I let you go, I've set an ambitious target, and I need you to support on this mark. My plan is to gather at least 100 enthusiastic traders to an adventure called the Weekly Cash Flow Challenge. That's right, cash flow. The heart of this mission, it's all about transforming you, yes, you, into the latest addition to my roster of 5-figure success stories, together with harnessed consistent extra cash flow from the market each and every week. Don't miss out. Follow the link below. Get started now and have a great day. Bye, everyone.